All right. Good evening. So I've been speaking to myself for the past few minutes, and I thought the microphone was plugged in, but it seems it was not plugged in. So that's by the way. So we're going to start this video all over again. So I'll go straight right into it. We started this trading session, this day's trading at this opening price, midnight opening price, New York. I'm going to reiterate this. All of you should toggle your trading view to New York. Set it at New York time zone because the algorithm runs on New York session. That is IPD. So no matter where you are in the world, your time window for trading view should be toggled to New York session so as to understand what we are talking about. Now during midnight session, price dropped lower and created this consolidation, this little consolidation here. And then at London trading, price rallied higher. Now, this is what I would want to see. Now, I did not just trade based on the candlesticks. There is sentimental analysis backing my trade idea going into the pre-market session. Now, as we go further, as I would explain the idea of trading the pre-market session on when you are to trade pre-market, that is before the 9:30 opening price. Because when you have this is one of the reasons when you have a speech by any of the members of the FOMC chair, like Powell or any of them, when you have them speaking within the 10 a.m. window to the 4 p.m. window, during this time, the market will go into a a style of like almost an untradable trading window, which is a high resistance liquidity run. And you'd want to avoid trading these types of signatures. So you want to be in and out of your positions before the the market opening time, which is 9:30 opening equities open. Now, coupled with the IPDA readings that was used, the IPDA tools that was employed for this trading, we also made use of sentimental analysis. In the previous video, I talked about sentimental analysis, how we make use of the sentiment from the general public to facilitate our trade idea and place our order. And also, it helps in generating narrative. So, going into today's trading, the previous week, within the past week or so, there have been buzz around and about how the market is going to the moon and the bull market has started. You want to see this. When everybody is hopeful, this is when you want to be a pessimist in quote. And when everybody sees chaos, this is when you want to do the direct opposite of it. So because everybody has been extremely bullish going into in all the market classes, trading the ES, I would expect price to create a fake move, a fake sentiment, and a fake indication that something that the uninformed will see as price making a pattern for higher prices. So price made this consolidation here, and doing this consolidation, price this is a bull flag. The uninformed will see this as price making a bull flag, trying to go for higher prices, trying to take out all of these highs. Now, at midnight opening price dropped lower and made a low here at 2 a.m. Then rallied higher. This rally, it is what I wanted to see going into this New York session. So this rally higher was the range for me to use to trade inside. It has given me a range that I would. It has presented indications on where to take profit, where to take partials. Because one thing as traders, you would want to understand where price is likely to draw to next. That is your first objective. Where is price likely to draw to? So at 8:30, price dropped lower. The price made this quick drop lower. So when price made this drop lower, we indicated this sell side liquidity here because didn't we were waiting for the pre-market session, which was the from the 8:30 to the 9:30 a.m. That was the time window we're trading. So when this drop was made, you take your Fibonacci and you indicate the high of the range and the low of the range. That is your current range, your current trading range that you're currently trading. So when you have that delineated, every PDRA above the midpoint of this range, it is of a premium. And every PDRA below the midpoint of this range, it is of a discount. And now we understand that price goes above true opening prices for premium to facilitate smart money sell orders that will be further offloaded at a discounted price as a discounted PDRA. So midnight opening price it's true fair value. It is of true fair value. So price rallied above its year after dropping lower, after giving us this indication for a bearish narrative and confirming our bearish trade idea going into the pre-market session before the 9:30 opening. So price dropped lower here and left this imbalance. Now you don't want this imbalance to be completely filled. So your stop loss should be placed at the candle that made this imbalance. That will be your invalidation point. You would want to the same way you understand where your target is, where you'd want to take profit is. That is the same way you want to have indications to give you an invalidation level. So our invalidation level for this trade idea was this imbalance here, was the eye of the candle that made this imbalance. Because if for in fact this market is in fact bearish, anytime the market makes an intermediate term high, that intermediate term high will not be violated. All right. So price drop lower. We'll drop down to the 1 minute time frame to show the executions and explain the idea. So this right here is a rejection block from the 5 minute time frame. Let's indicate this so we don't miss our bearing. So on the 5 minute time frame, you have this high here, this high created here, which we indicated as a rejection block here. So here we indicate this as a rejection. When I am personally trading in this trading, most of the times I do not label the chart because I'm trading a quick scalping model, and most of the times you do not have time to write down PDRs, to label out PDRs. So when price dropped lower here, we indicated every PDRA that is being found on the higher time frame. Also, this is a breaker. The high here, the low here, and price makes an higher high. This right here is a breaker, it's a bearish breaker. So you draw this out in time, but this breaker was not used for the trade idea. So now dropping down to the 1 minute time frame, we had this. So this is the pre-market session that I'm talking about. Our drawn liquidity is this lows here. Let's take out this indication. Our drawn liquidity is this sell side liquidity. So I'm going to indicate this as sell side. So we had sell side Western Union, which was our drawn liquidity. Now that you've understood where your drawn liquidity is first and foremost, then you understand where your invalidation point is, which is this candle that made this imbalance lower at 8:30. Now you have a terminus and you have an validation point. Now for entry models, every PDRA that's above the equilibrium of that range we indicated from the beginning of this video, every PDRA there, you want to draw that out in time and forward that to the left hand, to the right hand side of the chart to indicate that as a premium PDRA. So at 8:30, whereby it dropped lower, price left this imbalance here also. So we drag that imbalance out in time. This is a fair value gap. So we understood that this fair value gap should be acting. We want to see price respecting this fair value gap, and it should be acting as a resistance, resisting price from going higher. The idea of support and resistance, the idea of support and resistance is not as the rest of the general public view it as a straight line. Support and resistance is not a straight line. So because we understand that we trade in a gray area. So when price traded inside of this imbalance here, we understood that this right here is a bearish order block. So this order block was drawn out in time. So we want to see price respecting this PDRAs, this set of PDRAs. If price trades inside of this imbalance here and have a candle close, a candle body close inside of it, it is problematic because you'd want to see indication of bearishness in price. Every indication of bearishness should be presented in this premium PDRA, even though it makes this set of rally. This is the resistance I was talking about earlier. So when trading days like this, you want to be patient. You want to develop patience and understand that you would have back and forth price action like this. All of this will weed out the impatient, the impatient traders that cannot wait for their narrative to play out, for their trade idea to play out. So price rallies higher here, chase to the bearish order block here a couple of times at 9 a.m. Price chase to this bearish order block. One, chase to it again. Makes a relative equal high here. And remember, price trades above relative equal highs to pair up smart money sell entries and trade below relative equal lows to pair up buy entries or for take profits in these scenarios, which will be resting as sell side liquidity. So price trades above at 9:30 a.m. Price makes a Judas. This is what you want to see. You'd want to see a move in price that will bring in buyers at a higher price. Because these buyers that are coming at a higher price, you'd want to use their orders as a counterparty to your sell position because you are seeking sell side liquidity and you want to see PDRs, premium PDRs, resist price from going higher to go to your terminals, to your drawn liquidity. And we have this first partials where you have this relative columns here, which coincides with a discount PDRA, which is this discount fair value gap here. If you scroll right to the right hand side of to the left hand side of the chart, you see this here. This is an imbalance that was created here during London's trading. Right, back to it. So at 9:30, you'd want to see a fake move, which is a Judas move. That Judas move will make them think we've made a low and we're coming for higher prices. Now, when you have relative equal lows here, retail sees this as a strong support level. So they'll place their stop losses below these lows. They'll place it below this candle, below here, just below all of this. Because they lack the understanding of stop placement and trade management. So they'll place their stop loss below here and enter a buy position with this fake rally. This fake rally is what we want to see. Now we indicate higher time frame PDRs. Those higher time frame PDRs and all PDRs down in the lower time frame. That will be acting as a resistance PDRA. Now, so when this 9:30, when the equities market opened at 9:30, price rallied high like this and made the uniform see this as price making a low here and trying to go for higher prices. Now price rallies higher, pair up buy stops here and also this relative equal highs here, buy stops with a week. Remember the weeks do the damage and also when it does damage, it also pairs liquidity doing using wicks. So when the wicks does damage like this, the bodies are telling you the story that price is unwilling to go above this high, to trade fully well above this high. When you have something like this, you've gotten a couple of confirmation. Let's use that word. You've gotten a couple of confirmation that price is going for lower prices. Now price dropped lower and then made another rally again at 9:34 a.m. Price rallies higher. When price rallies higher here, price rallies higher again. Now you have these weeks. Price left these weeks like this. When price leaves weeks like this, you want to remember the algorithm sees weeks as imbalances. So these imbalances, you'd want to look for the midpoint of this imbalance here, which is this week, which is the consequent encroachment of this week. And you also have the consequent encroachment of this week. When you take two consequent encroachment of PDRs, of two PDRs, you have a gray pool here. So price chase for the final time, chase up higher inside of this gray pool. If you are pyramiding a trade position, say you enter above this relative equal highs here and price drop lower. When price made a grey pool here and it has been confirmed for a bearish narrative, this anything above this 830 fair value gap that was created, it is of a very expensive price. So that means we are in deep premium. So because we're in deep premium, you can then pyramid a position which will be lesser than this first position that you enter with. So price chase into the grey pool and then drop lower. Dropped lower and left this breakaway gap. So this breakaway gap, you do not want it to be filled because price has already spent too much time inside of here. So when price leaves a breakaway gap, that is the algorithm telling you that price is in fact s- wanting to seek discount PDRA quickly because price has stayed at a premium for too long. All of this PDRA, all of this trade from the 830 down to the 930 open. That is a premium PDR. Price has spent too much time at premium PDRs. Even though it chased to discount here, it fails to stay at discounts for too long, rallies to premium. This back and forth price action, it will weed out traders that are impatient. So price dropped slower and left this breakaway gap. Now, this breakaway gap was created above the midnight opening price. This is another indication that price is in fact seeking bearishness, seeking extreme bearishness going into the day's trading. So price drops lower, left a volume imbalance here. So you draw this out in time. Price left leaves a volume imbalance. We traded up, then we traded lower to the sell side liquidity target. You should be done and out for all of your trade position. Price has done what the algorithm has been programmed to do to trade from premium PDRs down to discount PDRs and below old lows. So we've had that here from this rejection block here. Inside of this fair value gap, also we have a great pool here. You have multiple confirmations of price resisting, showing resistance, a clear sign of resistance from going for higher prices. So you do not need to participate in all of this price action here. It is not of relevance if you participated in the pre-market session because that's what we did. So hope you got something from this video. Have a nice day and good luck, good trading.